Hey, gang, Maja here at FX Link. Thank you for joining us on this week's episode of The Trader's Journal. Now, today we are going to do some analysis on the NZD USD pair, and we are going to talk about a little bit about how important is Confluence in your trading. Welcome back to the charts. As you can see right here, I'm doing some analysis on NZD USD, Kiwi. They call it Kiwi. I like to go to the daily chart so I can do what I call top-down analysis. I start from the higher time frame and go down low. I use the higher time frame to get some perspective in the market and tell me, what is the direction of the market? Is the market going up? Is the market going down, or is it moving sideways? Some of you might say that the market has been going up for quite a while now, right? And some of you might say that the market is consolidating between 69.43s and 67.10s. However, if you would shrink up your chart, the market might be looking to give us a bullish rotation. The market likes to do this, right? So say that the market has been going down for quite a while right now, right? And the market ebbs and flows, right? If the market is giving us a bullish rotation, it will start to give us signs and higher highs, higher lows, instead of lower lows and lower highs. So the market will start to give us something like this, and this would give us a sign that the market is most probably looking to go higher, and the market does return back to its mean or back to its breaking point, right? So this is a classic case of this. Let me just take these out. I just like my charts clean right there. Well, and we are done. So this is what happened. All right, the market has been going down, right? The market has been going down, and down till we have this move right here. This move has violated this move right there, this high, and another high right here. And however, the market has been going sideways from there. All right, so what I find interesting is this level, actually, right here, these support levels right there, right? I have support right there, another support, and we have resistance and resistance. Whenever the market hits these levels right there at 67.19, the market tends to react in a good upthrust, I should say, or the buyers tend to come into the market and respond by buying, right? Soon as the market came back here, what did the buyers do? The buyers pushed the market up, right? And a similar thing I would expect as soon as the market comes back here. However, is this enough for me to take a trade? Of course not. You'd have to use your tools to form a confluence, what we call confluence. So we are looking at this level right here, right? We're expecting the market to react by going up as soon as price hits these levels right there. I use my Fibonacci retracements, Fibonacci extensions, ABCD patterns, and all of that to confirm my trades. So let's just use some of my tools. We can start with our Fibonacci retracements from this swing low right there back to this swing high. We don't have Confluence with our Fibonacci retracement on this bigger leg, but we can take this leg and take this leg right here, use this leg right there and drag it across to this high. As you can see, our 618 retracement does Confluence at this level right there. All right, so let's go to our lower time frame and see what exactly can we use to support those levels. All right, okay, so we might use our ABC pattern from this swing high. So let's take our line tool from this swing high back to this anchor leg right there. Copy and paste that. All right, put it on that retracement. You can see our ABC terminates right close to our 618 retracement level right there. All right, so if you could take our extension tool, Fibonacci extension, from our swing high back to our swing low and drag it back across there, you will see that our 1618 confluences with our 618 retracement and our ABCD pattern. Now, what else do we need to enter a trade? Well, it actually depends on the type of trader you are, right? Would you like to use limit orders to enter your trade, or are you a conservative trader? Simply, if you are an aggressive trader, you might be looking to set yourself up for a trading opportunity that looks something like this, right? My first targets would come at that 76 pip range. To my second targets would go back at this level right there, 109 to 111 pip total of reward. Stops, I would have to put 10 pips, put them 10 pips below stops right there. So I would have to have a 30 pip stop loss right there. Let's check if our stop loss is lower than this low. Yeah, it actually is lower than this low. So we have adequate stops right there. So if you are an aggressive trader, you might be looking to set yourself up for 1:3 risk to reward, and you might be looking to set a limit order as soon as the market opens, right? Or if you are a conservative trader, what you might be looking to do is you might be looking to have extra confirmation as soon as the market hits that level of structure. Excuse me. And as the market hits that level of structure, you might be looking for a double bottom and a high close, and to enter that trade, right? Well, personally, for me, I'll be looking for an oversold sign as soon as the market hits this level, and a high close for me to enter this level. If I don't get an oversold state, then it shows that the market isn't really exactly exhausted. If the market isn't exactly exhausted, then it's highly likely that I will get stopped out, and I should actually sit on the sidelines and wait a little bit for the market to get exhausted.